Good morning, everyone. My name is Nikhil. I'm from Jindal Global University. I'm going to talk about Australia-India trade flows. So I'm not going to touch investment flows and other flows which are there between the two countries. I'm just going to talk about trade flows. It's an interesting bit here, and specifically Australia's relation and emerging relation with India and how it's developing over the years has given us interesting insights. But I'm specifically going to look at this in the light of the current pandemic. I'm going to examine Australia's current account and how the pandemic has played its part in determining the direction of current account. I'm going to also talk about where Australia is trading with and what are its export destinations and what are its import sources and so on. I'm then going to locate India's specific role in determining the size of this current account. And then I'm thinking, what should India's role be, and not for the purposes of India-Australia relationship, but generally if Australia were to be an optimizing agent in terms of its trade relations, what should it do, and if there is a role in what it does for India. I'm going to assume a couple of things here because I'm not doing the complete analysis. I'm assuming that some things are going to be fine. So I'm just going to do a partial analysis of this. I'm going to assume that India does not have any demand constraints, which means that Australia can keep on exporting to India and India is competent enough to absorb that exports. I'm also going to assume that if those exports stay, the growth rate of India is going to be relatively fast for it to absorb the rate of growth of exports. I'm going to end with some policy prescriptions, which I'll come back to later on, but that's the direction in which I'm going, essentially. So let me just unpack the Australian current account balance here. And it's actually a surprising thing. Australia has maintained a current account deficit for a really long time. Like last it had a surplus, it was around 1970s. You can see the figure there. This peak in surplus in 1970s was the last surplus that it ever seen in current account balance. But surprisingly, after 2019, and this is the result of the pandemic, Australia has actually had a current account surplus recorded as a percentage of its GDP. And that has largely come from an increase in exports of different varieties, but an increase in exports. This was puzzling to begin with, as to the whole world is going under pandemic and why is Australia witnessing a current account surplus? What's happening here? So that's the cue with which I'm thinking of what's happening to Australia's current account, and is there a role in India here? So if I unpack that whole thing, the long-term trend, and I just focus myself on goods and services and then primary income, I see that the surplus is from June 2019. That's actually just before the pandemic, but it went through the pandemic and it has not stopped ever since. So Australia has been maintaining current account surplus throughout the pandemic, which is surprising. And it's been managing to export more than it's managing to import. And that's interesting. And that has something to do with the policy prescription that I'm going to come up with at the end. Now, I wonder if this is a sign of healthy Australian economy, or is it a sign of worry for Australian economy? I also wonder if this has something to do with macroeconomic imbalance and not balance, that Australia is maintaining a surplus. So these are questions which are pertinent and which one needs to answer if one needs to think about whether this surplus is sustainable. If at all we want the surplus to be sustainable, that's the question that everybody is talking about nowadays. The data is from Australian Bureau of Statistics, and these are balance of payments accounts, all seasonally adjusted and so Now, I wanted to know what's happening on the goods side and the services side. So I plotted the balance of goods and services, which is the light blue line here. And if you see that the balance on goods has actually come down significantly, which has determined the overall balance. But what is surprising is the balance of service has a secular upward trend. So Australia has been exporting services. It was earlier importing more services than it exported. But round about June 2019, which is when I said that Australia started recording a surplus, that the services balance was positive and continues its trend throughout the pandemic. So one then wonders whether the surplus, which is the current account surplus, is a service-driven surplus or not. And if so, well, is it a temporary surplus? Is it possible for Australia to sustain that surplus? And on the worrying part of it, why is that deficit going down? Like, why is that deficit going up for the goods account? So it's still in the surplus region. It has only crossed the services in 2021, but it's still surplus. So Australia does export more than it's importing in terms of goods. So it's still an overall surplus, but the goods balance is coming down here. I wanted to unpack specifically what's happening to services, and I wanted to look at service instead of service balance, service exports and service imports. So this is service exports and imports. It's a really long trend, and you see the secular service trend really reflecting here. Right from 1970s, when we have structured data, to about 2021, there's been a secular increase in service import and export as well. So there have been trade interactions centered around service much more than they have been around goods. And this has doubled up in less than 10 years. So that's tremendous. What's interesting here and what gives the surplus a bit more bite is that the service export has, for the first time, been above the service imports. And these are values. So we are actually looking at the service deficit here, but and the red line above the blue line shows that there has been a significant service surplus, right? So what I try to think about is that this is largely a service-driven surplus and not a goods-driven surplus, but goods haven't worsened the situation as much. They've still held their surplus. They haven't gone on to the deficit side or the other, right? Now, that the earlier graph seems strange because even in 2019, the service imports was higher than service exports, which would have technically meant a service deficit. But what's happening is that our export volumes started picking up just around 2019, that middle of 2019 or 2020, that's when export volumes started picking around. And our import volumes tapered in 2019. So what you see as a surplus first time recorded is the fact that our import services have tapered and our export services have increased. That's for Australia. The sudden decline in services is a bit more surprising than of goods. There are a couple of conjectures here at this point. One is that the service decline is potentially because of domestic inactivity. It could be that domestic firms are not, there's been lockdowns and so on. So that causes service disruptions, especially in the education sector. Or it could also be just a contraction in international demand. So if people aren't demanding enough services, you don't have enough services and so on. So that causes that worsening. That paints a reasonable picture in terms of Australia's current account balance. what it tells us is that it's more dependent on services recently, and that's actually a last 3-year phenomena. Its goods balance is deteriorating due to the pandemic, but it's not bad. It's still maintaining a surplus. So if this is the scenario and Australia has this current account surplus, what has India got to do with it? That's the question here. For now, we've looked at aggregates. Now we want to look at disaggregated figures and where these imports and exports are going. I want to look at partner countries and what are their import and export shares. The greater as far as Australia is concerned, the greater the export share for these countries, the more integrated they are with Australia. And the opposite is true for the other country. So if you look at direction of flow of goods, India is not in the picture in terms of a major destination for Australia. So India has a share of about 2.7% in Australia's total goods export. If you compare and contrast that with, say, the average export destinations, UK and US, they have like 5.4 and 4.1. But if you compare that to Asian region, China, Japan, and Korea, China and Japan itself together have about 50% market of Australian exports. That's amazing. That's huge. What more is that the trend growth for long-term years, I'm not looking at the recent year because the recent year is affected by pandemic, but a long-term trend growth implies that China is getting more integrated with Australia in terms of being a destination for Australian exports. So can India ever replace China, or can India feature in the top 3 or 4? It's really hard to tell. And given that India does not have as much of a manufacturing demand and so on, I think it's very difficult for us to envisage a scenario where India will significantly be able to increase its share. If not, it'll only decrease its share. But does that mean that there are no interactions between India and Australia which would be significant for Australia and which would determine current account flows in Australia? No, actually, they're not. That's not entirely true. What I meant is that's not entirely true. There are connections between India and Australia which are significant, which are emerging, specifically the direction of flow of services. If you look at that, we started out pretty slow. And if you look at the data before, in 2010, India was not importing a lot of services from Australia. But by 2020, its share was almost 10% and equal to US and almost competing with China in terms of service imports from Australia. So India starts featuring as a major service export destination for Australia in the late 2010s. But not only that, India has also been the most consistent export destination for Australia. If you see China has been an important export destination in terms of services, but it is nowhere near the growth rate of India. So that means that India has this huge potential of importing services. When I think of services, and when you look at the data for services, these are services like tourism, education, which is an important part here, and other services in terms of manufacturing services and so on. So these are the trends here. The bottom line from a flow perspective with the India-Australia relation is that Australia has been increasing its service exports. That has driven a lot of its current account. And India has an important role to play there, right? But it's clear, and it should be noted, that Australia has been exporting goods and has been having reasonable balance of goods. But India does not have a role there because India cannot absorb goods at the same rate as China or some of the other countries can do. Has this flow pattern been historically the same? It hasn't actually. It hasn't been the same. If you look at early 1900s here, UK and Europe dominated Australia's export market. So these were, I think, colonial connections and so on. So roughly about and after 1950s, after that era broke, you see a shift in Australia's export market, which was more geared to Asian economies, especially China and other Southeast Asian economies, right? US still maintained a relation between a trading destination, but so far as the other countries, European countries are concerned, they could not. Right? Now, that leads us to what I would prescribe should be the case, and I have some more statistics. In order to get a better prescription in terms of what should Australia's strategy be in terms of trade, we should look at what are the product-specific trade flows here and analyze those product-specific trade flows to understand which products are important for which countries and how can Australia gear its exports so that it can integrate better with countries, and whether it makes sense for Australia to actually integrate more with other countries and instead of China. So that's the question here. The resuming part of the presentation will be given in real time during the discussion. These are just leads to what I think might be possible reasons for the trends and so on. So we'll discuss them in the presentation.